Hi, my name is Alex CARLUCCI with Gustan Cho Associates. I want to talk about closing costs and how to avoid them, and I want to talk to you about veterans first. So veterans call me all the time and they don't have to put any money down, like anybody else. They have no money down, and for some reason they think that closing costs, they don't have to pay them because they're veterans, and that's not true. So what I do for the veterans, and I do for a lot of my borrowers, is I get the closing costs credited. So I tell all my customers this because they want to know what are the closing costs. I mean, it's one of the first questions I get asked on almost every single loan, and I say I can only guess, and I give you a range, and it's going to be pretty wide. It's going to be $7,000 to $9,000. It all depends on taxes. It all depends on your insurance. I don't know what your insurance is going to be. You haven't gotten it yet. The taxes haven't been verified. Yeah, I have estimates of what the tax bill might be. I don't know who the title company is. I don't, there's, what's your lawyer trying? I mean, is a realtor throwing in junk? I don't know. So I tell people, if I could get this number right, I would be flying people to Pluto because it's that complicated. I'd be a rocket scientist. I wouldn't be a mortgage broker because it's really that difficult to get these numbers right. So what you do is you get a loan officer who's really good at seeing the future and knowing what the costs probably are going to be, and then you inflate the purchase price and ask for the seller to credit you those closing costs. So the seller still gets their $200,000, let's say. Let's say that they say they would have to have $200,000. Well, let's say the closing cost I estimate are $8,000. I say make the purchase price $208 with $8,000 back. And if you're a veteran, that's going to be no money out of your pocket. That's going to be zero money out of your pocket going into that house. Now, with FHA, the 3.5% down, we get the closing costs credited to you. You have to only show the 3.5% down and bring that to closing. Now, some states, not all, like Illinois is the best, that's where we live. Illinois, the seller has to give you an additional tax proration at the closing, and that's generally somewhere around 9 months to 15 months of taxes. I just tell people it's about a year. So you're gonna get a year of taxes. So let's say you buy a house for $200,000, and let's say the closing costs are $7,000. So you're going to tell your realtor, let's go $207 with $7,000 back to pay those closing costs. You're going to go FHA, which is 3.5% down. 3.5% down of 207 is roughly $7,100. So now you have the $7,100 in your bank. And let's say your taxes are $5,000 a year, and the seller has to give you that $5,000. Now that $5,000 is going to come off that $7,100 down payment, and you're going to bring $2,100 to the closing table. Now, you have to show the $7,100 because FHA requires you have to have the minimum down payment, but that nice little bonus in Illinois with the tax proration of $5,000 is going to reduce your cash close to $2,100. So here in Illinois, we can really get people in the houses with way less than the 3.5% down FHA requires. There are other states, Florida's got some tax prorations. A lot of states have proration, but not as large as Illinois. So look for places, if your state is a tax proration state, it's going to help you get reduced down payment, and you're going to get seller closing costs to pay for your closing costs. So this video is about how do I get my closing costs covered. The only way is, there's actually another way too. Your realtor can credit you somehow. That doesn't happen that often. And you can actually take a higher rate from your lender. So if you need decent credit for this, so if you're in like the 580 credit scores, you're not going to be able to get a higher rate that gives you a credit. But let's say you got an 800 credit score and the going rate's 3.25. If you take 3.75, you might get a 1.5% credit. So 1.5% of 200,000 would be $3,000. We would give you a $3,000 closing cost credit from your lender. Now the lender, when they give you closing cost credits, they don't give it to you out of their pocket. They raise your rate. So don't be fooled by, hey, the lender's giving me $3,000. Well, they're not giving it to you. You're paying for it with a higher rate, and that's how lender credits work. So you got A, get it from the sellers, which is the best way. B, you have your realtor give you some back, very rare. Or C, take the higher rate because you can't come up with the money and basically finance some of your closing costs by taking a higher rate. So that's how you get rid of closing costs. If you got any questions, give me a call anytime at 630-915-7550, and please subscribe. Thank you.